the weekly market recap. We are going to be going over all the trades that we took, the trades that we should have taken, and the lesson of the week. What could we use this week? What could we use from this week on to the next week on forward to improve our, skill and be more efficient, more proficient, and all of those good stuff. And this week, I ended up on a negative 1 RR. Seems kind of weird. Probably wondering what this is, a 4 hour trade. This is an undetermined trade right now. As I said, this trade that we should have taken, right? This the goal of this weekly market recap always is going to be the trades that we should have taken. So what we're trying to do is we're trying to get closer to the trades that we're aiming to take always. Right? We're aiming to take the trades that always follow our trading guideline rules. Unfortunately, this one didn't follow my rule. This one did, but I fumbled. We do make full human errors. We do make those mistakes, but you know what I'm saying? It's a journey of each individual, right? I'll make these certain mistakes. You will make probably certain mistakes. Everybody has their own pros and cons that needs to be fixed. And overall, as I said before, the goal is to take the trades that follow your trading guideline rules. So if I didn't take this trade, I'm still gonna journal this trade. I'm still gonna talk about it. Because overall, if I talk about this trade, my mind would be like, I need to take trades like this, right? So my mind will my mind will attach to it, right? Instead of taking these shitty trades like this one and taking a trade like this and this, instead of me, taking the suboptimal plays, suboptimal trades, and take the trades that are very high probability. And all my setups are very high probability because all the setups, if the setup follows my rule, every single one of my rule, then that setup is a high probability. If it follows all my rule but breaks one rule, that setup is not a high probability, and I do not take a setup. If a trade were to respect all the setups, all the trading guide rules but break one, I would be taking a trade every single day. I would be fucking up. I will be in the dirt if that shit happens, right? I would be fucked. I'm not gonna lie to you guys. So you should always aim to take a very high probability setups, which the market has to respect all of your trading guideline rules. Whatever you have, you should respect every single one of them. If I take because on what I see, if you were to take a setup that followed almost all of your rule but broke one, you're gonna fucking fail, right? You're gonna boom, stopped out, right? This is just one trade, but keep in mind, the losing is not part of the losing is not the problem. Me losing money is not the problem. The psychology part is the problem, because that if I take this trade and it goes on a loss, guess what? It's gonna make me fuck up on my other trades. Because you know how trading is all about psychology. So you want to take trades that are very low frequency but very high quality and higher probability, quality over quantity, right? If I were to take every trade that follows almost all my rule, I would be taking setups every single day, and I would fucking fuck up my psychology, right? Because the goal is to take very high probability, low frequency, and quality setups, nothing else, because that is how you actually make it, and that's how you survive in the game. It's not about, how can I say this? It's not about losing, winning, because it's all about psychology. At the end of the day, why do people suicide? Psychology. They don't suicide because of the money, because of the psychology, or they get depressed and shit like that. I mean, believe it or not, people do that shit in this industry. It's kind of weird. But yeah, that's the dark side. We don't be there. All right. Let's stick to where we are right now. So let's get straight into it. This week We had our first setup should have been the Wednesday setup for a 4RR. Eventually, this is the setup we messed up on because I broke a rule, which was the short-term drawn liquidity rule. I I I focused on the long-term liquidity and I got stopped out because the short-term liquidity will always lead to the long-term liquidity. And I'm executing a 15-minute time frame. Why do I care about the long-term liquidity? Because the short-term, it could be drawn liquidity to the upside, downside, upside, downside, downside. Because market just can't go up. It needs to go through phases. That's why the short-term liquidity is very important. This case, this trader over here followed every single thing. He followed everything but one thing. A short-term drawn liquidity rule, and he failed. He followed everything, but he failed. He followed every rule, but one thing it didn't follow was the OTE retracement. He failed. Followed all the rule, but didn't have the right market one. Failed. Followed all the rule, but the short-term was not there. Failed. Followed all the rule, but we had a same price candle closure, which I don't trust because I need clarity. Clarity is always the key in trading. I don't trust when it's equal price closing. In this case, hey, this one followed everything. He followed every trading gallons. I could have been up 5RR, right? But I didn't take it because it closed the same price. I don't trust when things close the same price. Right? I don't trust that shit to me because that to me seems very tricky. I either want it close above or below. No equal. In this case, it closed equal. I'm not gonna take it simply because why? Not clarity. We need clarity to be there. We need to be very clear. And this one would have delivered fine, but you could see this. You would have been burned out. Let's say this realistically. If you were to lose this one, lose this one, would you really execute this one? Probably not, because you'll be so fucking burned out. You'll be cooked, right? You won't be able to actually know. You wouldn't be very confident in this setup working on your favor, right? Same to the other one, right over here. You take another setup, you'll be inconfident of this setup working out. So you either get out too early or you just don't execute. But enough of that yapping, enough of that ranting. Let's get straight into the weekly market recap. I'm all going to be talking about the days where I was active. I'm not going to talk about the Monday because the Monday didn't follow my rule. To the demo for a rule. I will talk about Wednesday. I will talk about the Thursday. But Friday we will talk about because we had a setup there. And Friday I fumbled. At the moment on the Friday trade, I would have been in a break-even trade. So the market goes back to my entry. It's going to be a break-even trade. But the market's going to take profit. It's going to be a positive 3RR. Says now, if the market take profit, it's going to be a missed out 3RR. If it's my stop loss, there's going to be nothing. But guess what? I'm missing out 3RR. I'm missing out a potential 3RR. If I hit my entry back, guess what? Break even. So, big lesson this week. And why am I, as I say one more time, why am I showing these charts? Why am I showing the trades that I should have taken, the trades that I didn't take, but I still journaled it? Because these are the trades that we overall want to be and want to take. Your mind will overall, because your mind will believe anything. If your mind constantly see this happening, your mind will take that shit. My mind constantly see that shit happening, so I took a shocking wrong trade, right? So it's all about, the repetition, right? If you could build a habit of doing something. And if I build a habit of me playing video game right now, I could bet you if I play that shit for the next 3 days, I'm gonna be addictive. I'm constantly gonna play video games, right? So your mind will think, okay, I gotta take shit like this. I see it happening, I gotta take shit like this, and your mind will overall go to it. As you guys know, at missed trade we journal, a winning trade we journal, a losing trade we journal. We journal every single trade, every single type, and we try to improve on each of them. Miss, journal, catch next time. Lose, journal, avoid next time. Win, journal, and repeat next time. Simple as that. Now, Just getting into it straight into the weekly market up, weekly market recap. This motherfuckers, you know, they're riding a loud ass bike or motorcycle or bike, what is it called? But going on Wednesday, we had a classic expansion profile onto the upside. Monday low of the week, we had a daily CRT to the upside. We had a daily IRL to ERL, as well as we had a, you know, we had a higher time frame. That was literally enough. I'm not gonna lie to you guys. We don't need nothing else other than that. On the lower time for the market narrative and context, we had multiple things here. We souped out a low, then souped out a high, stable low, then eventually a stable high. This is premium discount. We tell discount leader within the range high, as well as we had a false market shift of downside. We had another false market shift downside. That means we should be getting explosive price move to the upside. This took about, I'm pretty sure, 2 days to get down. It took literally took about 1 day and a half to get back up all the way there. False market shift are one of the best things you can use. We had a false breaker here, another false breaker, which caused explosive price movements in the opposite way. And on this day, I'm gonna talk about the trade that I took as well, which there's a lesson of that trade. So now, on this day, we had a near continuation because if I'm bullish, I want the London session to make the low of the day, not the high of the day. In this case, London session made the low of the day, so I'm looking for a near continuation, as well as I had a 4-hour order block as our key level. That was it. We had a range low, range high, range low, daily shifting low, range high, daily shifting high. We had a bullish order flow in this case as well. The only time the order flow is going to turn bearish is if the market closes below this candle. But the market never closed below that candle, so the order flow is relatively still bullish. Now, you go to the 15-minute time frame. I mean, that's 15 minutes. If you go to the hourly time frame, because of near continuation, we only execute near continuation at 7 a.m. to 10:30 a.m. That is our timing purge. So we let the 6 a.m. candle play out. Eventually, for the 6 a.m. candle is where we're going to be looking for setups after 6 a.m. candle gets, printed. 6 a.m. candle printed, get to 7 a.m. We work at 7 a.m. at a 6 a.m. candle, the vertical line, and as well as this is the high, this is the low. You can see the high got purged out first, then the market go into the low, and eventually went up higher. That is still valid because that is a double purge. And if the market purges out the high, it goes down low, purges out the and gives us like an SMT here. Then gives a model 1, goes up higher, hits a range high one more time. Then eventually goes back down to hit the model 1 more time. We cannot take the trade because it will inevitably fail. So be careful when doing that. Be very careful because that means it's no longer a range. You always need a range to be present when trading. Now, if you go to the low time for the SMT with GU with a 6 a.m. to 7 a.m. candle, we as well had a pretty clean price action here. We had an expansion reversal. We had a retracement with no bullish candle. That was a great sign that that was a reversal. Eventually, we're looking for either a threshold entry or model 1 entry. In this case, there was a lot of consecutive candles to the downside. So in order for us to take a body, this our model 1 is the body of this candle. Why specific this candle? Because if the market can close above or below one of the consecutive candles, full range equaling wick and body, and it closes above or below the next consecutive candle body, then we can use the body as a model 1. But we must first have a full range candle closure of one of the consecutive candles to validate that. In this case, it goes above this consecutive candle's full range. Eventually, this is market close of all over here. Then eventually our entry is going to be on the threshold because there's a lot of consecutive candle. These are relatively fat and thick. So what we want to be doing is entering a threshold right over here, putting a stop loss right over here, and take profit for a 4R. As you guys know, for a threshold, we go for a 4R. For a model number 1, we go for a 1 to 3 RR, and the resistance block we go to 1. We go for a 1 to 5 RR. In this case, on the 4 RR, and the newest candle instantly hit our take profit, which is very nice. And that was the lesson of Friday. As you guys know, news are not random. News will go where the market's supposed to go. Right, this was we're in a hard time supposed to go bullish because guess where the news went bullish. Now, let me show you guys the trade that we took, but this is a trade that we should have taken. The trade that we took, the only mistake was everything was fine. The only mistake was, and keep in mind, everything was fine. By the way, everything was fine. Just the higher time wasn't fine. And you can see here, we had deep OTE. We had all of this beautiful shit. Everything can be patternized if you don't have the bias and the draw on liquidity. Everything could be patternized, right? False breaker could be patternized. Everything is a pattern. How do you know which is the right pattern? It's simply by having a bias and a draw on liquidity, because this was a deep OTE retracement. This could be a first leg. This could have been a second leg, which didn't work out. Right, so that's why it's very important for you guys to have the bias and the drawn liquidity in mind first before these OTEs, breakers, whatever it is, patterns, right? Because the bias and the drawn liquidity is much more important than the execution in the pattern. Now let's get on the low time frame here on New York reversal. I'm not going to talk about like the context because this was a pattern trade, and what happened here was we had the right number one market didn't push me to the downside. So look, okay, I'm looking to take a trade just on the model one itself and put myself right above the above the body, weight doing the damage, body tell the story. So there's no need for us to put our stop loss here. All we can see is to hit this stop loss out because of the pattern trade. Everything was fine, just the high time liquidity wasn't fine. So now if you go to the high time frame, on what I saw on this day was that okay, we have an expansion lead range. We're going from a premium EOR back to discounted IRL. All the market is not gonna go down there. As you guys know, when there's a daily range, expansion lead range in general, after the discount or the premium gets tapped, market can just go from EOR to IRL without worrying about the premium says discount. And in this case, we made some bullshit theory there on that, and we really had nothing backing it off. We had already our daily IRL on this day already got met, right? So we're going to ERL. We're not even go from a daily ERL back to IRL. We go from a IRL back to ERL. So our hearts don't look was overall fucked up. And the lesson of this Wednesday trade is to always, I'll read out the rule for you guys, to always prioritize the short-term drawn liquidity over the long-term drawn liquidity. Right over here, I said I always prioritize the short-term drawn liquidity over the long-term drawn liquidity. The short-term drawn liquidity will always lead to the long-term drawn liquidity. As a day trader, the short-term drawn liquidity is my main focus, which is why I consistently prioritize it over the long-term drawn liquidity. Ultimately, the short-term drawn liquidity paves the way for the long-term drawn liquidity. Short-term drawn liquidity is daily time frame. Every day is a new day. There can be new drawn liquidity every day. I can't keep the same vision as the day before. I have to analyze the market every day because draw on liquidity can change, because short-term drawn liquidity can go up, down, up, down, up, down every single day. So that's why you need to not have the same vision as the day before and come back, analyze the market again as a freshie. So that was the lesson of Wednesday. On Thursday, we had a Russian block long. As you guys know, I don't trust same price candle closure. I either want to close above or below. But we had a Russian block entry to the upside with a stop loss right below the 50% threshold because the wick is too big. We had that entry, it was beautiful trade, but I didn't take it because clarity is key in trading. And on the Friday trade, now going over the higher time of drawn liquidity, Friday a lot of people were bearish. I saw a lot of people bearish of this daily CRT of the Monday candle. I saw a lot of people being bearish, but I was still bullish relatively. Why? Simple. Because the reason why I was bullish on this day, because of the candle has to confirm and print before you can do anything. If the candle isn't confirmed or printed, the effect is still on, right? So now on a daily time frame, on Friday, we had a daily IRL back to ERL, a classic. We had a daily expansion in range discount got tagged in range high, as well as we had a classic expansion profile one to the upside. Monday low of the week, we had a daily series to the upside. Now going to lower time frame on the 4-hour, we had a daily range premium discount, which had discounted range high. We're in discounts we want to buy up. We as well as we have a 4-hour key level, which is range low, as well as a 4-hour order block, and as well as, let's say we had a native growth profile 2, 5 commission, 9 AM mid-position, 1 PM expansion. As you guys know, for the native growth profile 2, the 8 AM candle is a very important candle, as you guys know that, right? So for the native growth profile 2, we can use the 8 AM candle as an advanced entry. So we use that as an entry. So now, as we're looking for a Neo Reversal Profile 2, 5 AM accumulation, 9 AM mid-position, and 1 PM expansion. We're gonna go down to the lower time frame to execute this. We as well relatively on this day, the order flow now is overall bearish because it's the last low that tapped the higher time frame, the level, which is the weekly ERL. So the order flow is overall now bearish, but we still had enough context to take this setup. So now go to lower time frame, the 8 AM candle, as I said to you guys, 8 AM candle is a very important candle. So 8 AM candle low got souped, and they never get disrespected. So we're still okay to take a trade to 11 AM. Eventually the sell got purged. We had the low got purged. Eventually we had the right number one. And I mean, we didn't have the right number one at first. It was the body. As I said, that's why I tell you guys, if everything is fine but one thing is missing, you're gonna fail. It's called the zero property math in fucking math, right? I've said it too many times. It's called the zero property in math. If you have, how to say, if you have everything but you're missing one thing, you're gonna fail. If you have everything set but you miss one thing, you fail. Simple as that. And eventually we had the right number one. At first, I'm looking for a threshold entry. And eventually, I was like, okay, I'm looking for a model one itself and putting my stop loss right below the body, waiting the damage bond to the story and market. The only time I was looking for a model one itself entry itself is after the model one got tapped and market did an impulsive to the upside where it didn't make sense to go back to the threshold. Oh, they did go back to the threshold, but as you guys know, and I think it can be perfectly like that. I can't, as long as we can execute a trade, that's all that matters, right? Eventually, we pull back all the way. We hit the entry one more time before 11 AM and we enter the trade. Stop us here and take profit to 3RR. What happened was this trade. I went back up to profit, and eventually the market messed around with me, and eventually I was like, okay, let me break even. I made some, BS theory. I was like, the market, I see this happen before. The market doesn't push me to the upside, comes back to my entry, and just toss me out instantly. Which that was a BS story, right? I was referencing to this specifically. But guess what? Did this trade right over here follow my trading guideline rules? No, it didn't. Since it didn't follow my trading guideline rules, this is not a reference. And I was like, when the market hits you can't, because your mind is that stupid, right? Like, we are that stupid of a human being. My mind even made it even more theory. It said, when the market sees my entry, it's usually bad, so that means market's gonna stop me out. But I had a setup that consolidated for a whole day on my entry before it moved to my direction. This setup right over here consolidated in my entry for a whole 21 hours. Exploded back to the upside, came back down, messed around my entry, then eventually to my take profit. So you mess around with me for a whole day before hitting my take profit. I was in drawdown for a whole day. That's what I just made was BS. because I had multiple setups where I consolidated for a long time, then eventually market go in my favor. And sometimes when it did that, it stopped me out. Guess what? Probabilities. Right? My goals take very precise trades. Eventually, that led me to taking breaking even too early. But the lesson on Friday is to not break even. The only time I break even is when it's Friday and I have a setup on Friday and the setup has not hit take profit or stop loss, and it's 4:30 p.m. UTC -4 New York local time. I'm gonna break even. So the new week comes around and there's a big wick to the upside or downside, it's gonna affect me. It's gonna be a break even trade. If it does affect me, it can make me lose a little bit or make me win. And what am I doing that? So now when the new week comes around, I have a new chance of potentially making profit. But if it goes back down to my entry or my stop loss, guess what? That's a break even trade. But we cannot break even before that, because if we break even before that, like in this case, let's just say this trade goes to the win. Now I just missed out on 3RR. It's gonna say it goes to the loss. I didn't miss anything, but guess what? It can go to the win, right? If it goes, if I was to take the trade and I would have break even at 4:30 p.m. New York local time on Fridays only. That's the only day I break even. Any other day I do not break even. If that's the only time I break even here, what would have happened is if the one goes down, I'm losing nothing. But if it goes up, I'm making money. That's simple as that. And break even is a scam. My entry is the OTE. My stop loss is the total soup. My take profit is a total soup, as well as break even is a scam. As you guys know this, I let the whole person play out. So the lesson of Friday is I do not break even. I let the whole person play out. I only break even when it's Friday and it hits 4:30 p.m. That's one time I can break even throughout the whole week. Otherwise, I cannot break even. My entry is the OTE. My stop is total soup. My entry is the OTE. You know what that means? That means market could go to my entry and consolidate in my entry as long as it wants, because my entry is the OTE. OTE. Push out. OTE. Push out. Right? We go back in the time. What time? We're referencing the same thing here, but it's a very good example. OTE. Mess around. OTE. Mess around. Eventually push out. Right? You can consider how as long as it wants, because it's OTE. That means it's gonna retrace to it or probably stay around there for a while before doing another move, because OTE usually makes a next move to happen. It usually makes the next move to occur. But that's the weekly market recap. So lesson number 1 is to always prioritize the short-term liquidity of the long-term liquidity, because short-term liquidity will always lead to the long-term liquidity. The next lesson is to do not break even scam. My interest, the OT, my stop is the total soup, my take profit, the total soup, as well as I let the whole person play out. The only time I'm gonna break even is 4:30 p.m. New York local time, in Fridays only. If I have a setup on Friday, the setup has not hit take profit or stop loss. That's the only time I ever break even throughout the week. No other time. And other one is that to have clarity, to take less frequency setups, take high quality setups, take high probability setups. As I said, anything times 0 is always 0. If you have everything but that one setup breaks one rule, that's 0. A lot of you guys like to have A+ setups, B+ setups, but the B+ setups, what you know that does, that means there's a rule that's missing. There's a rule that's getting respected, so that's what they call it, B+ setup, and still take it. You should only take A+ setup, which should be the only setup. You shouldn't even think about saying A+, B+ setup. You should only say setups, because every setup should follow all your rules. If you have a rule, I don't know, if you don't have a rule, man, you're not gonna make it in trading. It's very difficult. If you don't have a rule, you're gonna have setups every single day and you're gonna fail. And everybody's gonna fail. But thank you for watching. Make sure you guys like, comment, share, and down below. And I'll see you guys later. Peace out.